So within this session, we're going to go through and focus on corporate governance. Now, we're not going to go through and spend too long talking about it, primarily because you've seen corporate governance in consummate amount of detail there within your P1 paper. So you should be pretty happy with the corporate governance structures that you've gone through and seen before. What we're going to go through and do here is we're just going to go through and look at some of the key aspects of the syllabus that you're likely to go through and see within the exam. Now, what is that going to go through and cover with respect to P4? Well, what we're trying to do with corporate governance is we're trying to go through there and try and put in place a strategy to help try and resolve, if you like, that shareholder conflict that there may be. The fact there that your directors have been appointed as the agents of the business by your shareholders, the principals, which gives rise there to your agency conflicts that we saw within the last session. So what we're going to go through and do is look at things such as, are the board effective? How do we ensure that we have the right balance of individuals that are there within your company's board? So we're looking there at thinking about the chairman, the CEO, your non-execs and your executive directors. We then need to go through there and think, are they making good decisions? So we need to make sure there that they are going through and following the rules, the ethics that have been laid down to us with respect to the various rules that we have with respect to the stock exchange. So various codes such as the Cadbury Code, Greenbury, Hampel, Smith report, Higgs report. Are the directors following those within your day-to-day business decisions? What we then have is, last but by no means least, is we're trying to resolve the conflict. So we need to make sure that if good corporate governance principles are being pursued, are we able to know that as a shareholder? Now, the only way in which we can go through and look at that there is to see that the directors, the board, are making appropriate disclosures within your financial statements.